If you'd like to see more of our videos, please subscribe to our channel on YouTube or follow us here on Instagram. Good morning, traders. Welcome to today's market review. This is Razak at CMtrading. Today's January 28th, 2020, and today is Tuesday morning. So looking at the major economic events of the day, just one event coming out of the United States. At 5 p.m. South African time, consumer confidence number coming out. Now, this is a very important gauge of consumer confidence in the economy, and therefore it's tremendously linked to the Dow Jones. And traders really look at this number as almost important as the NFP and certainly as the FOMC. Okay, so you really want to be honed in and focused at this number when it does come out to see how the markets do react, because we've sold off tremendously as a result of what's been happening in China. Now we're looking at the Forex symbols, the South African Rand and the Canadian dollar correcting themselves versus the USD. We're going to take a look at the Euro as well. And looking at the Dow Jones, it's starting to bounce already after this scare in China, like I mentioned. But is it premature? Okay, because we still don't have the ramifications of what this virus could possibly do internationally. Now, next, looking at the commodities, gold slowly trickling down after that spike, again, because of what's happening in China. And oil is on support, but bounces, okay, reluctant to break that $50 support. Now, the stocks pretty much sold off, okay, except one group of stocks, which are the pharmaceuticals and medical equipment companies like 3M, like Pfizer, okay, which is a pharmaceutical company, which actually went up. In these type of situations, unfortunately, that's the reality, okay? So there are companies, unfortunately, that do profit from such a situation like this, okay? But let's take a look at the markets and see what we can expect from today's trading. So we're jumping first into the Euro USD, and as you can see, it's really getting very close and flirting with our support of 110.07, okay, 02-ish level. And really, we retrace from 112.29. This is the most we've retraced in such a short period of time, okay, over the past, over the past 4 or 5 months, okay, since August. So really, this has been a major move and a quick major move in such a short period of time. Over the last month, we've retraced over 200 points altogether. Now, if it does breach this 110, then we could definitely see it go back to this 108 ish level, okay, for sure 109-ish level, but it may even extend to this 108-ish level. So we'll see actually how that unfolds, because remember, we still have Brexit somewhere in the background, unfolding, okay, as Brexit is actually going to actually happen, okay. So that's something to consider. Now, looking at the USD Canadian dollar, we did see it retrace a little bit, but remember, okay, the Canadian dollar is quite linked to the oil. So as long as oil is going down, especially if it breaks 52, then I do expect the Canadian dollar to continue, getting weaker, okay, and thereby going higher versus the USD, okay, because it's 131 Canadian dollars to the USD, okay, which is the way it's quoted on the screen. So with that said, okay, so this is really linked to oil, so I'd peer my eyes on oil as much as I can just to see how this will unfold. Okay, we are in a minor resistance level-ish here. Okay, if you want to call it that, a minor resistance-ish level. We've had several times that we've challenged this level at 132, and either we bounced off of it or we breached it. Okay, in either case, this is a spot for us to retrace a little bit here. So that's something to consider going into today's trading. Now, looking at the USD ZAR, retracing down to this support line, the second support line, okay, which is our 30-day moving average. Now, if it does breach it, then we could see it actually retrace further. But for our purposes, we're really trading at support of 1455, okay, but it does breach that area. We could definitely see it going down to 1452, 1450-ish level, okay, and that's something to consider as that unfolds later today. Now, jumping commodities, we're looking at gold here as it trickles down to this 1578, but it's not making a major correction. And the reason being, both because we're going into February, which is a tremendous rally-ish time for gold, and two, because we don't know the ramifications of what's going to happen in China. Okay, so it's a couple of things to consider as this unfolds. Now, looking at oil, we're bouncing at this $52-ish range, okay, 53.19. But again, if we breach this, this will make major ramifications on the price of oil. And it's really just a lot of things that are going into effect. Is the fact that the world is shifting from gasoline cars or petrol cars to electric cars. It's a lot more because there's a lot more efficiency in the type of machinery that we have today. So aircrafts are much more efficient, fuel efficient, because either aerodynamically or because the engines are much more efficient. So the fact that oil has retraced this much is really indicative of the shift in our culture of how we presume and how we consume oil. Okay, besides the fact that oil has really been extracted from the world in many different places where they thought that they couldn't initially get there as well. So with that said, the fact that we breached $52 a barrel may be actually a good thing for the final consumer. Now, looking at the Dow Jones, we are bouncing hard here at 28,674, but this really does need to go into the 28,800-ish level to give us more of an umph. And the reason I say that is because if this consumer confidence number comes out positive, then I do expect that, okay? But there's a lot of uncertainty in the market, and that's to be expected, okay? So a lot of things that we need to see how we'll actually absorb them over the next couple of weeks, especially if this virus gets contained, okay, and it does get to a point where it's not spreading, and then we're back to business as usual, okay? But where it's not back to business as usual because the first week of February, we have the Iowa caucus coming out, which will pretty much let us know who the front runner is for the Democratic Party that's going to go up against Trump in November. Okay, so I know we're only 10 months away from that, but before you know it, it circles in. Okay, so with that said, we're getting closer to that time frame. Now, looking at Facebook, it didn't really retrace that much, okay, to 214 from 222. Very strong. If we look at some of the more volatile stocks like Apple, it retraced over $10, $12 here, okay, to 308 from 320-ish level. If we look at Amazon, it got weaker already on that Friday, and then further capitulating here at this 1827. Looking at Netflix as well, breaching that area. Okay, so the stocks are strongish, but okay, the question is was this just a reason for them to sell off, or should there be a further reason? Okay, we'll find that out in the next couple of days. This is Fred Razak. I wish everybody a great trading day. Thank you.